So gold yesterday, you should check gold. This is gold for yesterday. Check gold, we've been in a downtrend. First thing that we saw was that we are coming from a downtrend. As you can see, downtrend. Then after having noticed that we're in a downtrend, we always know that in a downtrend, the supply zones are always going to be respected very much. So I marked from this zone, after this breakout of this range, I looked to the left, looking forward for supply zones. This one was respected. This supply here was respected. So this one now, after the market pushed and broke the structure here, after this break of structure here, I noticed that the market left this supply zone here and also left an imbalance on this zone. So there was an imbalance, number one. Number two, there was a supply zone, which happened to be an order block there as well. So those are two confirmations already. Number three, the market structure was bearish. Number four, the market rejected as soon as it tapped into this order block or supply zone, and we took our entry there. Our stop loss just above there, -27 risk compared to reward. So we also had this trend line here, which I said retail traders trap. Why did I call it a retail traders trap? If you check here, according to retail traders, they started buying here. Bam, their stop losses were taken out. Then here, as soon as the market came back for a retest, they sold. Bam, their stop losses were taken out. So meaning that was just liquidity being taken out from retail traders before the market went all the way where it was supposed to go. So according to us, we took the entry there, supply zone. Our target was the demand zone here at the bottom, which has been reached, which is, so the risk compared to reward was simply risking 30 pips, as you can see, 30 pips to make 213 pips. 13 pips, risk 30 pips to make 213 pips. So that was the whole trade setup for gold yesterday. That was the whole trade setup for gold yesterday. Let's look at US30. Let's see US30, what happened on US30. So US30, we also had an analysis yesterday whereby we predicted this demand zone to say maybe we'll start to buy from this demand zone. But if you can look at it, this demand zone actually failed to hold. Meaning nothing much was taken on US30 yesterday. So this is a failed demand. I can simply extend it like this. Failed demand. Let me mark it here. Failed demand zone. Right. So one can also call it a breaker block. It's also called a breaker block. Because it's an order block that would have been broken and the market starts going to the opposite direction of that breaker block, right? So this breaker block that I have on 15 minutes, so this whole level, this whole zone is an imbalance on the higher time frames. It's an imbalance zone on the higher time frames. It's an imbalance zone on the higher time frame. So if you check here, looking on the 15 minute, we have this demand zone here, or this order block here, that the market left here. So I just want to see the response of price on this order block. So once we get our entry there, we can as well get a confirmed entry upon the mitigation of this zone here, or the mitigation back, or the inducement back to the imbalance zone, maybe around this. So yesterday I'm looking forward for this. Either the market will come to this zone, either it comes to this zone, respects this one, then we go. Once it comes and breaks structure there, I'm expecting something like a retest to an imbalance of FVG gap. Then boom, I'll take my confirmed buys on that zone. So far, that's what I'm looking at. So I'm simply looking for entry confirmations in this whole zone. If this market breaks this whole zone that I've just marked, I marked this zone based on, I think, on a weekly time frame. So this zone is actually big because it goes all the way to so this is the zone. This is the zone. If you check, we're already in a discount zone. We are already in a discount zone according to the Fibonacci, around the 78.6. So if ever the market does not give me any confirmations based on smaller time frames for entry, I'll simply wait either for the market to come and tap into the 78.6. Maybe it can actually bounce from the 78.6 there, because it also happens to be close to this order block here, the beginning of this order block here as well. Or even I can extend this whole zone like this. If I extend it like this now, it means I'm simply going to wait for 4-hour daily confirmations for this whole zone. Because this whole zone now, what I'll be saying now is, or I can just mark this order block only like this. This way it's much better like this. It's much better like this. So I can just mark the order block like this, meaning I can wait for the market to come and tap into this order block. Once it taps into this order block, then I wait for getting my entry confirmations on daily H4, H1, smaller time frame somewhere there. So I still feel like US30 still has room to go down all the way up until it taps into this OB. So what we can do for today is to maybe scalp some or look for selling opportunities, since we can still push further into this zone. Let's go to the daily. We can still push further down. We can still push further down. We can still push further down. Let me just remove everything. Right. Let me hide my Fibonacci. Okay. Let me remove all these zones. Not necessary for now. So, looking at things from a simple retail perspective, you see that we had this counter trend that was broken, retested, then we are going down. So now we broke this low here. We broke that low according to a simple retail perspective. You can see that we broke that low there. Let me just mark the level here. We broke this zone here. After breaking this zone, we retested. So most probably the market can come back to play around with this zone according to a simple retail perspective. Let me just change the color there. Just change the color. This is a resistance zone, so I need to put in a different color. Different from order blocks, different from supply zones or demand zones. So this is a resistance. The market can come back. Once it comes back and taps into this resistance, we can look forward and get our sell entries, right? That is the first possible scenario. Or the market comes back to this order block here, which also happens to be an area of imbalance as well. So I'm actually ready for both a retail trading move or an institutional trading move. If it comes and taps into this fair value gap here, fair value gap that I'm only seeing here, it's actually this area here. So if it comes and taps into that area, we'll simply take our sell entries from that zone up until we get to the weekly order block area that I'm expecting. So this is a fair value gap and also an order block. Maybe it can come all the way there, boom. So if ever it does that, you can actually see that this will be something like 38.2, 50%, somewhere around those areas. 38.2 or 50%. The furthest that it can ever go, the furthest that it can ever come to is this supply zone on the daily. If it comes to this supply zone on the daily, we can also take our sales based on that. We can also take sales based on that. So it can actually come. So here, another scenario on US30. US30 can actually come, then boom. This can also happen before it goes all the way to tap into that weekly order block that I saw. So this can happen before we go all the way back down. So there as well, we can take sell entries here on this daily support or daily supply zone, I mean. So either on the fair value gap, if it fails here, we'll look forward to this zone. Let's go to the 4-hour. Let me just remove this. Remove that. Let me just refine the zones. So this is the resistance on the 4-hour. Resistance here. Let me just refine it. Just like this. Like that. Right. 4-hour, 1 hour. You can already see that we are going down. Break of structure here. Break of structure. Break of structure. Price, the market left this order block just like the same way gold did. The market left this order block, which also happens to be a supply zone. So after breaking structure, we anticipate the market to come back, tap into our supply, continue going down. So the market has actually been breaking structures. If you check so many times, we've been breaking structure, break of structure there as well. Break of structure, break of structure. Right, break of structure, this one, prices are back to tap there. Here, what broke this structure? We're looking also at this area here. So either one of those areas has to, the market has to come back. Either one of those areas, the market has to come back and tap. So here, I'm looking forward for a tap here. We can take sales there if ever it respects this one. If it doesn't respect this one, we can take sales there. Otherwise, if ever it doesn't, if we see the market breaking, if you see it now changing character, coming back, you can actually take buys as well. Buys, we can only take them after a change of character and a mitigation into the order block or into the imbalance or the fair value gap that it would have left. That is the only way we can take buys. But so far, our buyers, it's still bearish. Our buyers is still a bearish buyers. So you were simply waiting. We're simply now waiting to see what the market is going to do. So it's going to change character. What is going to be a change of character here? It's a scenario whereby the market will come and break the previous lower high, come back, mitigate the order block, then boom, then we go up. So somewhere around this area, we can get some scalp buys to the upside. Because that is an order block. Why is it an order block? The market came, broke structure here, as you can see. So most probably can come and tap back inside there, then we go all the way up. Once we come there, we look for sales. If we don't get them there, we get them most probably there, because here there's also liquidity that was kind of created. There's liquidity that was kind of created here. here. Why am I saying this is a zone of liquidity? So this is not a best zone for entry. This is not a best zone for sell entries. Why? Because there's a lot of liquidity that is lying above that zone due to the nature of these, due to these equal highs here that we have, equal highs that we have there. They have a lot of liquidity that the big guys might want to tap into before they go down. So there, in as much as we have this block, so that is why I made it like that. I don't expect so the best one is to take sales from there, so that is what I'm looking at. That is what I'm looking at. The market is still yet to tap into our weekly order block, which is almost there, but it's not yet there. So once it comes to this order block, maybe we can scalp some buys all the way to this level. That is what I'm looking at. That is what I'm looking at now. Right. So if ever we get the market to come to this zone, we can take our buys there, boom, targeting this area there as target for the buys. Then we take ourselves. I'm targeting the weekly order block, the weekly order block for the target of those sales. So that is what I'm looking at. Let's see how price is going to move. The latest time frame that I can go to is the 5 minute. This is only where I stop. I stop on the 5 minute. 5 minute. So here we are. Price has tapped into the order block. This is the order block. Price has tapped into the order block, as you can see. And it's almost rejecting. Let's just wait for the candle close. Then we'll make a decision from there. We'll make a decision from there. Break there. We'll wait. We'll simply wait and observe whilst we're outside. If it breaks there, we simply wait and observe whilst we are outside. But so far, let's see. Let's see how the market is going to close. Let's see how the market is going to close. We can refine these levels. We can refine this level as well. So according to what I'm seeing, the market is breaking the zone. Breaking the zone. We can actually have a breaker block there. If the market comes back and reaches that level, that's actually a breaker block. When a demand zone or an order block has failed to hold, then the market comes back and retests it and continues going down. That is what we call a breaker block. So if it becomes a breaker block, we'll simply enter ourselves based on the retest, on the breaker block. Closed below, so meaning no buys as yet. No buys as yet. No buys as yet. No buys as yet. I would love the 15 minutes to come and reject on the zone there. If it rejects here, we'll simply take sales targeting the same weekly order block. But if it comes back inside, then comes back and rejects inside, we'll take our buys. But so far, we're looking forward for sales. We're looking forward for sales. So it will be something like this, short position from there to the weekly order block, which is something like 634 pips, 634 pips that we can get there. So I would love the 5 minute to close. This 5 minute candle, if it closes below there, you can as well consider taking sells. This 5 minute candle closes below there, we can take sells. We can take sells. And if it goes back above now, it will be violating everything. Then we'll simply have to enter buys upon the rejection inside there. But so far we have to wait and see how the 5 minute candle is going to close, because order blocks also, they can actually be manipulated. Order blocks, they can also be manipulated. But if it gives us the situation of gold, like what we saw in gold yesterday, that one would be a very beautiful one, whereby price goes back up, taps into this supply, then boom. That one would be a beautiful scenario, because it takes us way at the top there. But if it doesn't, it's also okay, because we'll simply follow what the market will be saying. So it's already closing above, meaning it was just a manipulation of the order block there. So if that happens, the next candle we expect it to come back and reject inside. Once it rejects inside, we'll simply take our buy positions. We'll simply take our buys all the way. First target here, second target. We're looking at this supply zone there. See, it closed above. Closed above. Closed above the zone. So this 5 minute candle now, I would love it to come and tap into this zone. Once it taps into this zone, we can take our buy positions. Once it taps into this zone, we can take our buy positions. Let me see how many pips are those. 1:11 risk compared to reward, which is good. 1:11, meaning if you risk $10, you make 110, risk 100, 1,000, risk 1,000, you make 10,000, risk 10,000, you make 100,000. So it's just like you can actually use the concept of risk compared to reward to make sure that you are profitable. So I'd love the market to come back and tap inside that order block that it is manipulated. Once it taps inside there, you take our buyers all the way to the supply zone at the top there, which is 1:11 risk compared to reward. 1:11 risk compared to reward.